This is the Equity Management Academy weekly podcast for May 17th, 2022. Gold. Has inflation peaked? Summary. Larry Summers, former U.S. Secretary of the Treasury and now at Harvard University, said in an interview on May 13, 2022, that he has been warning about inflation for some time. The overheated labor market is driving service prices up, which is at the core of the inflation numbers. Supply chains and commodity prices are making it a difficult environment for quite some time to come. Fundamentals. Larry Summers, former U.S. Secretary of the Treasury and now at Harvard University, said in an interview on May 13, 2022, that he has been warning about inflation for some time. The numbers, he said, were worse than expected, and we may hit a high last month of 8.2%. He does not believe that we're going to hit 2% anytime soon. The overheated labor market is driving service prices up, which is at the core of the inflation numbers. Supply chains and commodity prices are making a difficult environment for quite some time. Summers said that most inflations do not get stopped out by a single slowdown. They are usually multiple attempts to slow inflation before it actually slows, as it happened in the 60s and the 70s. We are also in a major labor shortage than before, which means we will see less deflationary pressures than we have seen before. He believes that the average inflation rate in the 20s will be higher than it was in the teens. More analysts are saying we should set a target for inflation that is higher than 2%. But he thinks doing so would undermine any limited anti-inflationary credibility the Feds may have. Talk of doing something about price gouging at the pump and other gouging are just danger nonsense. There is no material prospect that in any enduring way gouging legislation can have any substantial effect on inflationary pressure. But it can contrive all kinds of shortages. It can inhibit the supply responses, which is the best way to overcome inflation. Gouging talk is the diversionary confusion. The real determinants of inflation have to do with the total level of demand, which is being stimulated by policies. Policymakers, if they want to lower inflation, should lower tariffs, allow more immigrants into the country, and remove inhibitors of supply, such as requiring that ships that move U.S. crude be U.S. owned, and that the moratorium of student loan debt should continue until the economy improves and inflation rates fall. Fear and greed drive financial markets, and crypto is not immune to that. He said in relation to the crypto decline in prices, when you don't have backing and you lose confidence, he said, you have a big mess. The fundamentals suggest that gold should continue to move down. The variable changing price momentum indicator disagrees. Standard deviation and mean reversion. Gold. On May 14, 2022, Equity Management Academy CEO Patrick MontesDeOca reported on gold, which made a recent high of 2003 on April 18 to a low Friday of 1797. A low of 1704 was made on August 6, 2022. If we use that as the low and connect to the high of 2082 on March 8, 2022, we see that it was a phenomenal move in a fairly brief time. Not until January of 2022 did we begin to see the market reverting from that extreme below the mean of 1923. We use Fibonacci retracements to analyze these moves. The move from 1704 to 2082 established a trading range. The price now has come down to almost 78.6% retracement, which is normal within the confines of a long-term bull market since 2020. The bull market started in 2019 after the Federal Reserve raised rates 25 points. The 78.6% retracement is about 1784.90. The low so far was 1797, which is pretty close. Right below that level, we begin to see extreme below the mean of standard deviation levels, which indicate that the market has reached a very strong level of support. It has completed almost a 78.6% retracement and is at the variable changing price momentum indicator, VCPMI, monthly buy 1 level of 1844 and the buy 2 level of 1792. The Fibonacci and the VCPMI indicators are overlapping, which is a strong signal that the market is likely to revert back up. If gold closes above 1844 or tests 1792, if gold does that, there is a 90-95% probability that gold will return to 1923. This is a specific signal that you can use in your trading to get into the gold market with a high probability trade. These levels are where the artificial intelligence of the VCPMI predicts that buyers will come into the market and the price will rise. If you are long, don't despair. If gold closes above 1844, or if it tests 1792, it would signal that you should add to your long position. It is a great time to dollar average. It is an excellent time to enter the market at a time of spring seasonal lows and load up on gold at a low price. Gold. The VCPMI 360-day cyclical supply and demand annual report for 2021-2022 was published on September 29, 2021. The summary was the annual trend momentum of 1794 was bearish. The VCPMI of 1840 is bearish price momentum. A close above 1840, which is the mean or the 50-50 standard deviation, would negate this bearishness to neutral. If you're short, take profits between 1572 and 1409. And if we trade above 1840, take profits at 2003 to 2071. For the next 360-day cyclical period, which began on September 29, 2021, the first cycle took us up from 1731 through November, when we made the annual low of 1764. After hitting 1879, it corrected back down again in December to 1757, which was the annual low of 2022. From that low, gold ran up to 2082, which was above the initial expected target in our September 28, 2021 gold report of 2003. As the VCPMI predicted, gold then started down again as buyers came into the market. Anyone bought at that point on news about the war in Ukraine and supply issues is now underwater. The VCPMI, being contrarian, recommended selling at that level and waiting for gold to complete its pattern. If we close above 1923, then we will reactivate the VCPMI, sell 1 level of 1976 and the sell 2 level of 2056 monthly targets.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.